For years, Rajesh Exports was considered one of India's biggest corporate success stories. The Bangalore based company built a global gold empire. It owned Shubh Jewellers chain, controlled international operations through subsidiaries, and regularly reported revenues that placed it among India's largest listed companies. On paper, the numbers were staggering. In financial year 21, Rajesh Exports reported revenues of 2.58 lakh crore rupees. By financial year 26, that figure had jumped to nearly 7.8 lakh crore rupees. But now, India's market regulator has raised a question that could shake investor confidence in one of the country's most prominent companies. Were the revenues real? Hello and welcome to The Print. I am Samah Qundeel and here's what happened. In a 109-page interim order, the Securities and Exchange Board of India, or SEBI, has alleged what it describes as one of its most serious cases of financial misrepresentation seen in recent years. According to the regulator, nearly 97 to 99% of Rajesh Exports' reported consolidated revenue over multiple years cannot currently be verified through supporting documents and records. In simple terms, SEBI is questioning whether revenues running into several lakh crore rupees were actually backed by genuine business transactions. And if these allegations are eventually proven, this could become one of the biggest accounting scandals in Indian corporate history. So, how did this investigation begin? Interestingly, it didn't start with a whistleblower or a government agency. The entire case began with a shareholder complaint filed in March 2024. The complaint pointed to unusually large trade receivables, money supposedly owed to the company by customers, that had remained unpaid for more than 2 years. That raised red flags. When receivables remain outstanding for unusually long periods, regulators often examine whether the sales behind those receivables were genuine in the first place. SEBI launched an investigation and appointed forensic auditors from BDO India to examine the company's books. What investigators found only deepened their concerns. One of the biggest issues was a huge gap between Rajesh Exports' standalone revenue and its consolidated revenue. Standalone revenue represents the company's Indian operation. Consolidated revenue includes overseas subsidiaries. According to SEBI, almost all of the company's reported revenue between 97 and 99% was coming from foreign subsidiaries. Naturally, investigators wanted proof. They asked for customer-wise sales data, invoices, inventory records, vendor details, purchase records, and transaction-level evidence. SEBI says much of this information was either incomplete, inconsistent, or simply not provided. And that became the central issue. If nearly all of a company's revenue comes from overseas subsidiaries, but the company cannot adequately demonstrate the underlying transactions, regulators begin questioning whether those revenues actually existed. A major focus of the investigation was Valcambi SA, a Swiss precious metals refinery that is considered the crown jewel of Rajesh Exports' international operations. According to Rajesh Exports, Valcambi recorded only processing charges in its own books, while another group entity recognized the much larger value of gold transactions. SEBI wasn't convinced. The regulator noted that Valcambi's audited financial statements reflected only processing income and not the enormous revenues that eventually appeared in the group's consolidated accounts. This led investigators to ask a simple but crucial question. If the refinery itself only reported processing income, where did the hundreds of thousands of crores in consolidated revenue actually come from? SEBI says the company failed to provide adequate explanations, accounting opinions, or reconciliation statements to support its accounting treatment. Another major red flag involved a company called Affluence Shares and Stocks. According to Rajesh Exports' books, transactions worth nearly 11,500 crore rupees in purchases and another 11,500 crore rupees in sales were conducted through Affluence. But during the investigation, SEBI says Affluence denied carrying those transactions altogether. According to the regulator, the company stated that Rajesh Exports was never even its client. The contradiction immediately raised serious questions about whether those transactions were genuine. SEBI's order also highlights concerns about funds allegedly moving through promoter Rajesh Mehta's personal accounts. The company argued that some of these transactions related to digital gold trading and that Mehta was merely acting as a conduit. But investigators say they could not find board approvals, audit committee approvals, or formal authorizations supporting this explanation. The regulator has questioned why company related transactions were being routed through personal accounts in the first place. Another issue relates to purchases allegedly made from entities called Vienna Multiventures and Harshil Enterprise. The company claimed purchases worth over 59 crore rupees. However, according to SEBI, there were no purchase orders, delivery records, inventory entries, GST records, or bank transaction evidence supporting those purchases. In some cases, invoices allegedly appeared to have been generated years before the transactions were recorded. The regulator concluded that the explanations provided were not satisfactorily substantiated. The original complaint that triggered the probe also appears to have uncovered deeper issues. SEBI found that trade receivables worth 2,914 crore rupees were adjusted against trade payables through offsetting arrangements. The regulator says the company failed to demonstrate any legally enforceable basis for making those adjustments. As a result, investors may have received a misleading picture of the company's financial position. The investigation also examined claims regarding investments worth over 1,000 crore rupees in African gold mining assets. According to SEBI, the company failed to provide sufficient documentation, valuation reports, or supporting evidence to verify these investments. Throughout the order, one phrase appears repeatedly. SEBI says it found indications of routing and layering of funds through promoter-linked entities and personal accounts. In financial investigations, layering refers to moving money through multiple accounts or entities in a manner that makes tracing the original source and destination more difficult. While the investigation remains ongoing, these findings have prompted SEBI to take immediate action. Promoter and executive chairman Rajesh Mehta has been barred from buying, selling, or dealing in the company's securities until further orders. SEBI has directed the company to fully cooperate with investigators. A fresh forensic audit has been ordered. The regulator has also referred the matter to National Financial Reporting Authority, or NFRA, to examine the conduct of the company's auditors. Importantly, this is still an interim order. SEBI has not delivered its final verdict. Rajesh Exports and Rajesh Mehta will have the opportunity to present their defense and respond to the allegations. But the language used by the regulator leaves little doubt about the seriousness of the matter. SEBI has described the findings as egregious and unheard of and suggested that the conduct appears to be part of a systematic, multi-year scheme of financial misrepresentation. Thank you for watching. For more such content, keep following The Print.